Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, folks, here we are after market close on Wednesday, October 13th. We're going to take a look at SoFi today. Now, I know it wasn't the most exciting day for SoFi, and I know that I had mentioned, I'm not intentionally going to do daily videos still with SoFi, rather if something interesting happens, but I do think that there's some stuff to talk about on the daily chart, and I do also want to share a new position that I took in SoFi and sort of explain why, because it might be a strategy that you could at least look into, consider, and see if you think it might work for yourself. But let's first unpack the daily. I do this every single video. The intraday, and then we'll take a look at the daily and see where we are in the vast scheme of things. And then we'll take a look at the data, and then I'll quickly talk about the position that I took today and why. So on the intraday chart, as you can see, now this is sort of the opposite of what happened yesterday, and I want to kind of talk through why. And this also is a good example of why we chart these supply and demand zones on the daily chart and use them to see what's happening intraday. Today is a prime example of that. Yesterday was too, actually. But today we didn't get any slingshot. Again, it started briefly down, but it wasn't like a stretch down for like, a half hour or an hour even, and then a slingshot back up. This was essentially a bit of a bull trap here earlier on today. So it came up, got over the VWAP, and sort of did a test of the VWAP here more than anything. Went back over, and then it looked like it wanted to do a double test here. And this actually did fake me out a little bit too. I took my position much earlier than I would have. What I should have done was waited to see if it was going to stick itself to the VWAP versus bounce. But I got a little too sort of bought into the idea that it was going to come down and bounce and wanted to catch it, as idealistically as I could. And that's always been a problem for me. Anytime that I go in with the mindset of I want to try to snap this up before it turns around, that always has gone against me. And so it's one of my hardest things to break, and it caught me again today. So it's good for me to remind myself. Now, luckily, I think in the vast scheme, it's going to be okay. But yeah, it's a note to self to do better next time. But yeah, basically what we saw, let's compare this to yesterday really quickly. Yesterday we saw struggling with the VWAP, and then it did something very similar to what it did today. It briefly dipped below the VWAP, came up, and now look how differently this test of the VWAP looks, right? First of all, it broke quite a bit higher above the VWAP before it came down to test it. Now, it didn't exactly test off the VWAP, but everything, including the VWAP and including things like the 180 MA or the 200 MA, whatever MA you're using, are a bit of a zone, right? It's not always to the penny. It's usually not to the penny, but to discount that structure or that movement because it's not to the penny, you're going to miss out on a lot of things. So in any case, this was clearly a different motion, this bounce and up. That's the motion of, okay, this is going to rebound throughout the day, versus today where it came in and this didn't bounce, right? This did, like I said, that very similar thing. It came down and broke just below the VWAP, reclaimed, and then I was looking for that to do that bounce like we saw yesterday, but it didn't do that. It stuck. And I should have waited to see if it was going to bounce and realized that it was sticking, which is sort of a hallmark look on a bull trap. It breaks above, comes back, sticks, and falls. But that's okay. What we then saw was, again, not to the penny, but just 2 pennies shy, 1849 was a clear bounce zone here from 1847, which we have had on the chart for quite some time as a support zone. Came up, and then it also started to do something similar but opposite to what we saw yesterday. So today, this 180 MA started acting as clear resistance from about say 1 o'clock in the afternoon until it broke it. I mean, it really broke it finally at like 3 o'clock, like so a bit into power hour, and then it retested it, right, and jumped off again. Like that's the bounce retest that you want. This is not a bounce retest. This is a stick and it's a trap. So luckily it came back today for me, and I felt really good after I saw the bounce off of this 1847. I was tweeting about it a bit in real time. If you want to go check my Twitter, that handle is in the description below. But yeah, so luckily, it sort of in the vast scheme worked out today. But this is just to put myself on notice publicly more than anything. But the degree to which that helps folks see the difference of the trap, which is this, versus the confirmation bounce, which is boom, that. See, just a double candle, boom. And then confirming additional support all day long off the 180. That's what we saw yesterday. Versus today, trap, fell below, quickly turned that 1904 into clear resistance, right? It tested that immediately and then came down and really quickly tested that. I mean, that's a big range to test down, right? But it very clearly went. This is, again, for folks who are really like wary of the charting. First of all, I don't know why you'd watch my videos if you're really wary of the charting, but if you are, just look at the movements, this past week especially, but you can go back months and see these videos and see it bouncing just very clearly off of these levels several times that could have led you to, critical position taking or position exiting based on that movement. But anyway, bounced today and then treating that 180 as resistance. So looking like it was going to turn down, and then as it was able to reclaim support over the MA, and this is really just fighting with it, right? This is the true support. It was nice that the 180 was sort of in close quarters with the VWAP, because what it was able to do was fight with the 180, try to make a first impulsive move off the 180 and then sort of get rejected by the VWAP, but then catch support, confirm support off the 180. And that was when it was able to come up and just toward the end of the day start trying to reclaim the VWAP, right? Like this was the next fight that was going to happen had the trading day not come to a close. It was going to try to do essentially what it did here with the 180. It was going to try to do that here with the VWAP. So in my opinion, going into close in a pretty strong position for SoFi. Now, if we zoom out and take a look at the daily chart, which again is where we take all of these levels from, it's trying really hard. This is what we've been talking about for a few days now. It's been trying today it's trying really hard, but we've been sort of with the bullish hope of it getting into this white channel, because like I've been saying, this is the escalator up. These are stair steps up that we've been taking, which are in line with a trend line that's here that I got rid of yesterday just because it clogs up the chart, but it also encompasses this green uptrend line and this white uptrend line, but those are the stair steps up. This white channel is the escalator up. So this could really help accelerate, how much juice we get in this squeeze. Not a short squeeze, but I'm just saying like a price pump, price jump, whatever. And so this is a candle that's solidly in there right now. So what it's going to do with that is really interesting to me. So to me, at this point, 1847 or this 1904 zone aren't even the most important. To me, wherever we are on the chart, this bottom white bound of this channel is the most important thing. Now, if it gets more into the center of this, then we're obviously in even better shape, and we're sort of securing some space in that channel. And we have a lot of like support zones to fall through. Then there's a lot of like you would see a drop coming because it would fall through several support zones here. There's not only supply and demand zones, but there's a channel zone. There's a previous uptrend line, two previous uptrend lines that would have to break through. So there's a lot of different levels. So this is just, a symptom of where you would be able to see, for example, a larger drop in price coming from a mile away because it starts to work its way through all of these different zones. So one of the added values of it getting into something like a channel is it just adds additional layers of support that would indicate to you if a sell-off is happening. It should give you extra opportunity to get out. Even the 180 now got support off of the 180 yesterday, and we see it coming up, well over that at this point. So that'd be another level of support. It was almost on level of security. Don't confuse levels of support with levels of security. It can still go against you very quickly. But yeah, that's what I'm looking at the moment. Now, we did get about 30.5 million in volume today, and just remember that's compared to over 47 million yesterday and almost 70 million the day before. So volume coming down a bit, but if we are going to have red days, and it's healthy to have some red days, you do want to see the volume dipping on those red days. So to me, this is actually quite an okay sign. I like the placement of the candlestick. I like how it moved on the intraday today, which we were just talking about quite extensively, putting in motions in all the right places, in my opinion. And, I'm ready and willing to see if we're going to take this escalator up into earnings or what. I mean, it's not too far out for it to just catch a tailwind and start going. Obviously, there's always work to do to get there, but it's interesting to be tracking it for the time being. Now we could flip over to the data here and just have a quick look at what's going on. There's old Ortex now. Shorts barely doing anything today. A smidge increase in short selling coming in, 7.35%. That's estimated current short interest percentage of the free float per Ortex. So, on a high double digit. But again, I don't start raising flags or being super concerned about the distorted selling pressure until we get over 10%. And then we could start being a little bit more, cautionary about the whole thing. I don't know what's going on here, but some, decent news continues to come out here. And for whatever reason, SoFi catching, speaking of tailwinds, catching some sort of tailwinds with the media and stuff like that for the time being. Now, the position that I took today, let's talk for a minute about earnings. I think earnings, double check me on this, because I know that we first thought it was on November 11th. I think now it's set for November 10th at 5 p.m., the earnings call. But double check me on that. And so today I took a call position that expires on November 12th. What's the options chain? November 12th, because that's 2 days after earnings. That's really only like one full trading day. Well, I guess it expires at the end of the 12th. So no, it's 2 full trading days after earnings. But anyway, you've probably heard before, or maybe if you're looking into, if you're familiar with options, you've heard before about IV crush, implied volatility crush. And the idea here is that the price of the extrinsic value of an option, meaning the likelihood that the stock price will be so volatile that it'll hit your out of the money call or put option, increases significantly when something like earnings day approaches, because as we saw, you can have a huge reaction to earnings. SoFi dropped over 14% the day after the earnings call. And so because you can have these really huge reactions, it increases oftentimes the value of options that are expiring shortly after earnings, that are being held through that earnings date. And so what I have been having luck doing, and I haven't shared this anywhere previously, but I've tested it a few times and I've had decent luck buying these options about a month, maybe even just 2 or 3 weeks out, for an expiration that lands just after the company's earnings, and just kind of holding it. And yes, it certainly helps if the chart looks good, and the chart looks like it wants to move in the direction of your option, be it a put or a call, and then letting the IV do the rest of the work for you. And even last time going into earnings, we had a pretty modest run up here. It wasn't anything like amazing, but I had 20 and $25 call options at this point. These were trading in the like 16s, right? And even those were profitable, selling them the day of the earnings call, because the earnings was happening after the close of the trading day. I was able to sell them the trading day, so I didn't hold them through earnings. That's how you get IV crushed, is you're holding it through earnings, and then once the reaction is over, there's not this big sort of question about how crazy the price movement will be based on the reaction to earnings, be it positive or negative. And so then it loses all of this extrinsic value. And so buying it far enough out where you're not yet getting super caught up in the ballooning of the price because of the earnings coming up, and then holding it through and letting the IV work for you, not as a seller at all. Sellers do this a lot, but not as a seller, but as a buyer of an option. Has again, it's worked for me more often than it's not recently. So I just wanted to share that with folks. So and I just had said previously that I would share when I took new positions in SoFi, and so that's why I wanted to come in and make this video tonight. Again, not because it was the most exciting trading day with SoFi, although it is exciting that this candle is in this channel. But I did want to share that I got this new position. It's a $22 call. Okay, so a bit out of the money. And it's down about 9% right now, which again is because I because I timed this entry so poorly. Like I said, I made one of my common trading errors, which is trying to catch the bottom, which I just need. This is a really good additional reminder to just never do. But with it being down about 9% right now, like I said, I'm okay with that because we have time. And even though time typically works against you when you're on the long side, in this case, my thesis is that the IV is going to outpace the theta decay and is going to put me green just in and of itself. Now, obviously, if SoFi drops to $12 or something, that probably won't be the case leading up to earnings. But I also, based on the chart and what's been going on with the stock, I don't expect that to happen. So I think that the stock alone may get there and may help just boost that price, and that the IV will just sort of be an added bonus. But we'll see. We can experience it together. And if you want to wait to see how well this works out in order to decide if you want to consider taking this as a strategy of your own, then, I'll be happy to share how that goes. But my plan is to hold it probably until the day of earnings, unless it gets so crazy profitable that it seems silly not to just lock in that profit. But we'll see when we get there. And of course, it could go totally against me. It could be worthless by the earnings date. Who knows? But all right. I know I'm super long-winded today, but very tired. And I don't know. I'm just a long-winded person. So you know that by now. All right, folks. I hope that you had a happy hump day and that you're able to finish the week off strong. I appreciate you watching, and I will see you in the next video.